focus in on the stocks that are on the editor's radar today. Well, it's result candidates, and the two heavyweights are the ones that we're zeroing in on. So let's begin then by talking about Tata Motors, and what a move it's been. Nikunj, I bet you're thumping the table saying, we told you so. But yes, 4% away from its life highs. And of course, when it comes to numbers, we'll be watching out for a lot of factors, GLR performance, dividend payout, etc. But what's the view on Tata Motors?
You know, it just could be one of those phases in the short term. When I say short term, couple of days, right, where Tata Motors actually could sell off, could see a sell off post the numbers, because the run up has been strong. Nothing in the environment has changed so dramatically fundamentally, which really supports such a sharp move in Tata Motors. The GLR concerns are still there. They're doing very well in passenger car market that we knew a year ago. Tata subsidiary, Tata IPO subsidiary IPO was coming. That's a passé 6-month-old story. They are getting market share gained in CV. Everybody knows that. All these factors were at play 2 quarters ago. Then what has changed in this quarter? It's only recognition that Tata Motors is suddenly offering that value. Now that recognition has to be always backed by numbers. So numbers will always come with a slow pace. And numbers in last 2 quarters on GLR front have been decent. We pretty much know that it's no longer the albatross, so to speak, for Tata Motors. So I don't think incremental changes will come in Tata Motors, and because the stock has seen a run up, it's a trader dominated stock. That's how the margin trajectory for GLR has moved. 6 is not going to become 8. So this bump up of 2.5 to 6 is something markets know. A little bit of disappointment here. And given the volatility in Tata Motors stock and the beta nature of the stock, you could be in for a buy the rumor and sell the news kind of a trend.
Okay, so this one is going to be closely eyed. 511 is where the stock is at. Moving on then to pharma, Cipla in the spotlight, and seasonally it is a bit of a weak quarter when it comes to Q4. Generic US sales numbers all will be closely eyed. What are you penciling in for Cipla?
So you must look at a very different number for Cipla. And for Cipla, I think it is the India number which is important. And we've looked at all the pharma companies where India component is large. And for companies where India component is large, the India component or India business has managed to beat expectations. So India is where growth is, India is where high per capita spend on medicines is moving. The generic is now taken over by branded, and Cipla has a formidable market share. They have a formidable market share in respiratory market, the diabetes market, and also in some chronic care. So I think for me that becomes an added bonus for Cipla, where the domestic market could surprise us, unlike in case of Dr. Reddy, where the global business was under pressure. Also Mankind Pharma, 97% from the domestic market. That sets the benchmark as to how you want to value a global business. This could be the dark horse, I think, for rest of the year. I think it is expensive, so it does not get this kind of recognition, because it's Cipla is one of the stocks because it's been consistent after the COVID bump up. So it does not get that kind of a recognition because it is not cheap. But I think gradually the way things are moving and what Umang is trying to do, you may start seeing evidence of that in this quarter numbers, and especially on the domestic front.
Okay, and after the terrific year that it had last year. All right, Cipla and Tata Motors, Aisha, would be interesting to get our experts' take as well on these two candidates.